everyone. I'm Gwen Preston. I'm the Vice President of Communications with West Red Lake Gold Mines. We are pushing the Madsen mine to a restart, which is our goal. It is to do that by about the middle of 2025. So that's coming up quickly. Madsen mine is in Ontario, Canada. It's on the western side of that province in a region that's called Red Lake. Prolific high-grade gold mining region with a history of 30 million ounces of production. The Madsen mine was part of that history quite a long time ago, and more recently we purchased the asset not even 2 years ago when it had stumbled under a prior operator who made some errors in their effort to get it restarted, and we've spent the last 18 months remedying those errors and getting this high grade resource ready to be put back into production as a rare new gold mine in 2025.
Gwen, lovely to see you again, really is. Look, want to have a look back at sort of what you managed to achieve this year and maybe then have a look forward into 2025. Okay, I would say this last conversation I had with Shane when he was in London, it was kind of clear to me that you guys have got a big emphasis on the de-risking and that value creation. And it's slightly more conservative approach, but that's something you feel you've got to do to be able to answer that question around timeline more accurately, isn't it?
I mean, you were talking to a mine engineer, so what did you expect? No, but for real, I mean, this process has been about first of all, putting a mine into production, which mining is risk mitigation. It's a boring, perhaps, way of explaining it, but any major project, taking it from concept to reality, is about managing all of the things that can go wrong along the way. And so mining, as a very complicated machine, has a lot of aspects to that. There's a lot of things that could potentially go wrong. And so the most important aspect of putting a mine into production is to have a plan and then realize what could go wrong as you enact that plan and address all of those risks. So yeah, de-risking is huge. And so that's been a big focus for us. And layering on top of that, of course, is the fact that this is a mine that did stumble 2 years ago and went bankrupt under the prior operator. And so that only reinforces the need to communicate to everyone that our focus is on ensuring that it's a success this time. So for sure, it's fundamental to what we're doing is managing the risk that is inherent in mining and is manageable if you have the expertise and capital and approach.
And keep it simple. That's what I got from that call. Right. Let's talk about where we started the year and how you have kind of kept it simple and focus on using data on what needed to be addressed. So beginning of this year, what did the company look like?
Yeah, so a year ago, we had really only gotten started at the Madsen project. Drills started turning in October of 2023 after, closing the deal in June, and it takes a while to just, get your feet underneath you. And so then we started with one drill underground, and then in the spring, we added a second drill underground. The work that those drills have done is really fundamental to our de-risking approach. Really, if you want to distill it down, the de-risking approach at the Madsen mine has been do lots of definition drilling, so more drill holes into the existing resource to more accurately model where the gold is located, know where the gold is. So de-risking through drilling, really a fundamental part of it, and then be able to mine that gold accurately and efficiently. So appropriate mining methods and efficiency in how the mine is set up. Those are the thesis in how to make in why we will be able to make Madsen successful when it recently was not. And so definition drilling ongoing, 1 rig, then 2 rigs that have worked nonstop through the year to enable those rigs to get to the places that they need to get to and to just proactively add to the underground infrastructure at the Madsen mine. We've had crews making new tunnels underground. You got to get the drills over to the areas where you want to do the definition drilling. So you drive a tunnel this way and you drive a tunnel that way, and that gets the drill rigs access. Those tunnels will then be used when we mine those areas. So we've had underground drills, we've had underground mining crews. They're not mining mineralized material, but they're getting us over to the areas where that mineralized material exists. Then we added another set of crews underground late summer when we started work on the connection drift, which is a major underground tunnel that goes from one side to the other side of the width of the Madsen mine. And that's a really important piece of infrastructure to add because it means that the whole mine can flow through the modern portal, which is the west portal, instead of having to go through the east portal, which is a constrained, small, inefficient portal for several reasons. So that's a really important piece of infrastructure. So we've had a bunch of crews active underground. Like, we've had between sort of 80 and now 140 people employed at the Madsen site working regularly 24 hours a day for most of 2024. So that's been a big thing. And then they've not only been working underground, but also on surface on several of the other projects that we need to, help this operation be efficient when we turn it back on. So it's been a march through the year to sort of tick these things off, the various projects. We needed to do a 4-foot raise on the tailings dam. We need to get the mill ready for restart, which we're targeting in just a couple months. We needed to build a camp and a mine dry, which are ways of attracting good employees to come to our mine because they have a good place to stay. Lots of capital projects, not lots, but a list of important capital projects that we know are going to help us move and process mined material more efficiently. We've just worked our way down that list. And in doing so, we've really tried to build up our operational readiness, right? When we turn this mine on, we don't want to be figuring out what we're doing while we're doing it. We want to practice, implement processes, practice and test them, and have them ready to roll when we turn the mine on. So that's been a big part of what we've done as well. Everything from HR to procurement to sort of like the ERP, which is like how you manage resources at the mine site, the ERP system, budgeting, all of these are, we have to practice what we're going to do before we put it into practice. And so that's also been, underlying everything. So yeah, it's been a busy year.
Yeah, I get it. Look, I think the thing that strikes me about this project is there's a few kind of key things I think investors look into and say, like, these are things they got to nail down here. So, I think Shane was talking about sort of geologic confidence matrix, and because you've got to understand the geology to be able to kind of create the resource, to be able to better model this, to ultimately, and I think this is going to be an important bit for you, is, what does that mine design actually look like, right? And then everything associated with that mine design being all that kind of operational stuff, on the ground and underground. So there's a lot that already exists, which will help, but it all needs to be work perfectly and fit together and all of this. But can you tell us sort of where you are at the moment when it comes to the timeline and strategy for all of the above?
Absolutely, yeah. And I mean, this is it's a fun moment to answer that question because 2024 was this really busy year where we were grinding through a lot of work, and we had to raise a bunch of money to get all of this work done. But 2025, where all of that work has got us to the point where in 2025 we get to start actually doing it. And so what that looks like is we're currently test mining. And so again, practice before you do. The crews are ramping up their ability to mine accurately and efficiently by doing the test mining program, which is also generating bulk samples for us. And we're really excited about the bulk samples because, go back to what I said, the idea here is that we can restart Madsen successfully if we know where the gold is and we mine it effectively. Well, the test for that is mining, doing a bulk sample in a few different areas of the resource, and then processing that bulk sample and having the grades be what we say they're going to be. That's really the test. So we're doing that now. We're producing those bulk samples. They're being stockpiled on surface in batches according to, the parts of the resource where we pulled them from. And the plan is to have 8,000 tons of that bulk sample stockpiled by the end of February. And in February, we're going to turn our mill back on so that we can process those bulk samples in March. And so in the lead up to the full processing of them through the mill, we will report some sort of initial reconciliation results. You can sample from those stockpiles and get a first look at how the reconciliation is going. And then once we process them through the mill, then we'll be able to report full reconciliation results, actual versus expected grades. And I think that's going to be really key. So we're doing the test mining. So we are mining. We're going to turn the mill on in probably February, certainly in Q1, and process those bulk samples. That connection drift is going to be done by the end of March. So the underground infrastructure will be all ready in its efficient setup to start moving mined material. As soon as the bulk sample program is done, the crews will roll into mining. They will stockpile the material initially while we're processing the bulk sample and making sure the mill is going and, making sure we're fully ready. And then the goal is to roll into production, just to carry on through from bulk sample into production processing, and the goal is to be there by the middle of next year. So this is all right around the corner. And that's what's so exciting, is that we've got ourselves there. We need to continue our ramp up. We're increasing our average development meters per day. Like we get a lovely report from the mine site every day that shows us underground development. So that's how many meters have they done the connection drift, how many meters of development, how many meters of mining, put that all together. What's the overall meters per day? We're pushing that up. It was only 10 or 12 a couple months ago, and now we're up in the 20 meters per day range, more than, and we're pushing to get into the high 20s by the time we start this thing producing. So we have lots of internal goals that we're marching towards and want to achieve before we get to full production in the second half of next year. But what's really satisfying and exciting is that we're doing it, and this mine is ready and on schedule to turn on in about half a year.
Okay, well, let's remind ourselves, because I agree with you. There seems to be there's a lot going on the ground, and it's actual work. It's not a theory of it. You're actually doing it. Let's remind people of the size of the prize here, because it's so easy to kind of skip over things like grades and margins and so forth.
Yeah, good point. So this one of the things that we really love about this asset is that it's a high grade deposit, right? So our indicated resource here is we have 1.7 million indicated ounces at an average grade of 7.4 grams per ton gold. So that's the resource that we're going to tap. We're very soon going to put out a pre-feasibility study that outlines exactly how we're going to mine, what of that, and how we are going to mine it in this initial version of the Madsen mine restart. And that study will be out early in January. It's reasonable for people to expect what we've been saying all along, which is sort of a 60 to 65,000 ounce per year producer. That's our goal. And so 60 to 65,000 ounces per year pulled from a very nice high-grade resource. That's what's going on at the Madsen mine, and is right around the corner.
Right. Okay. And let's just understand how this works, because you took I think the conversation is around sort of 800 ton per day production rate. Okay. Do things like ore sorting come into play here in terms of being able to increase that the amount processed?
Yes, for sure. So I'm sitting here writing the news release ahead of the pre-feasibility study. If it's going to come out in early January, it turns out I should probably get going on that now, because there's this thing called Christmas that gets in the way. So, we're working on how we're going to present this really important study to the market. And the section that I was writing literally just before we got on the call is sort of the upside case for that we want to ensure people understand sits on top of the pre-feasibility study. So the pre-feasibility study, the mine that we are starting up next year, it's a reasonably conservative, I say conservative. What it is it's a realistic look at what we can mine right now. So we have this resource. There's a lot of underground workings that get us, access to lots of parts of that resource. So what of this resource do we know we can mine economically now, based on existing data, workings, and what we can economically develop over, the next few years of the mine life. That's the PFS. It's going to be a good mine. It's going to have good returns. It's going to make sense, especially in this gold price environment.
Okay, well, let's talk about that, if you don't mind, because you've got to get the kind of debt component. There's a big bunch of infrastructure you picked up for cents on the dollar, right? That understood. Great start to any business, but there's a kind of debt component to come in a high price gold environment like this, and presumably high margin as well for high grade mine. There's going to be slightly easier conversations, but nevertheless, you need to get those over the line. Have you got a sort of sense of how that works, and will that come out in the PFS?
Yeah, for sure. So you may recall, so we funded this thing, our company, the Madsen Mine Project, predominantly through equity over the last 18 months or 16 months since getting this thing going, right? So we've raised $90 to $100 million in equity since acquiring the project. And then there was also one debt component. It was a gold-backed note, which was a really, look, in hindsight, I'm sure lots of people wish that they owned some of that because it was a gold note that's linked to a low gold price, and upside from that $1,800 gold price all goes to the holders of that gold note. But anyways, that's how we funded the project up to this point, is through equity and one issuance of a gold-linked note. And that, some investors dislike equity always because I understand it dilutes individuals' exposure to the stock. But we needed to be able, the goal was to get this thing into production as soon as possible. There's hardly any other new gold mines going into production in 2025. We really believed that we had a window to take advantage of a high-priced gold environment. I think that price is going to stay, but you want to ride the wave, right, as it goes up. So we were really pushing to get this thing back into production as quickly as we could while doing all the work that was needed so that the restart was a success. So equity got us to here because that's what was available and could happen, as needed. From here on, now that we're so close to production, taking on debt becomes, is on the table. And those conversations we started with various potential debt providers months ago now. And we did announce in, was it October, a $35 million US debt facility, term sheet for that. That work is progressing. And so the reason that we named a $35 million US debt facility is because we have very detailed calculations on what it takes to get this mine, to get the last capital projects completed, and to fund working capital until this mine starts making money of its own. We have very detailed calculations on that. And that debt, that credit facility answers that need. And so we clearly understand what we need, and we're comfortable taking on debt of that scale at this point. I think it's really important to think about the scale of the debt relative to other gold mines. I mean, a lot of new mines go into production with much higher debt loads relative to cash flow than we expect Madsen to have when we put it into production. I say expect because, of course, the feasibility study isn't out yet, and we haven't, closed on the debt deal. So I don't want to put in certain terms things that are not quite over the line yet. So the scale of debt is something that we're quite comfortable with, and also just the de-risking that we have done. If you look back, people blame debt as one of the things that tripped this mine last time. But I suggest that those debts were signed and promises were made about what the asset would be able to achieve on what timelines before they actually had the de-risking and knowledge done to know that they could deliver on those timelines. And so we suggest that we are at a stage now where we know what we're going to be able to get out of this asset and we've been realistic about that. And so we're comfortable taking on debt of whatever form it is, so that because we're comfortable we can deliver on whatever covenants or requirements there are to that debt package. So I think scale and de-risking matter a lot when it comes to considering the role of debt in financing a mine.
For sure. Point well made. Understood. Agreed. You're in a very different place from when the last management team did what they did. I've no problem with that whatsoever. Can we talk specifically about the market a little bit, if you don't mind? Because you said something that's quite interesting. You are quite close to production, right? You're at that point. What we're seeing in the marketplace is producers being rewarded heavily. One, because they got revenue, which is always nice in mining. It's a very rare thing. But two, the margins are significant, and that kind of builds up the kind of balance sheet quite quickly. What are you seeing out there? Is there an expectation that you might be able to kind of join them in terms of that reward that the market is giving you?
Absolutely.
Or could give you?
Yeah. I mean, that is the near-term investment thesis, absolutely, for West Red Lake, is that based on our, price to NAV, not that we have a defined NAV, but if you use a net asset value based on analysts' reports and things like that, our price to NAV still has us, that ratio still makes us look like an unfinanced developer. So like maybe someone with like a PEA or maybe a PFS, but like lots of permitting, engineering, financing, huge de-risking steps left to do before starting construction of a mine. Whereas we are, of course, quite different from that. We are, we are on the cusp of production. And so the change from unfinanced developer type NAV ratio to junior producer NAV ratio, that's a big change. You go from sort of a 0.25 NAV to probably a 0.6 NAV. And in that, we will define what that NAV is, which is something that the market doesn't know, and I think the market will be pleased with. And so I do think that the re-rating, just as the market accepts, acknowledges, gets clarity on the state of our progress, I think that is a pretty clear near-term investment thesis. I think that clarity will come when we issue this PFS at the beginning of the year, and as we go through these last few de-risking things, doing the reconciliation, demonstrating that we are going to deliver on the promises that we've made at Madsen, and putting this darn thing into production, all happening in the near term. So, and then of course, the gold price is just on top of that. You say, revenues being strong. Yeah, thank you, gold. Step back in the last few days because of the Federal Reserve, and that's fine. But I think the arguments for gold remain pretty strong, and so that's just on top of the near-term re-rating that I think is at hand for West Red Lake.
Okay, just want to, before I get off the conversation, want to understand this myself. With the PFS, that's just going to be done on the Madsen project, none of the kind of satellite projects. Is that right?
Yes, good question. It is on Madsen, but we are wrapping our heads around how and when to likely do a study that's a bolt-on to the PFS sometime in 2025. We have to figure out exactly regulatorily and whatnot how it works, but we do in the near term want to do a bolt-on to that PFS that brings in some of those other opportunities that you clearly are hearkening to, like the Fork deposit where we just found a high-grade zone, the Upper 8 where we've just delineated a new ore shoot, the Rowan project that's down the road. We want to be able to pull that into an official mine plan. So that is something that we will also deliver on in 2025. I'm not going to say timelines right now because we're figuring out how that bolt-on study will look.
Okay, interesting, very interesting. Well, super excited for you, near-term producer. People love those producers even more so. So good luck for 2025, and thanks for the update.
Thank you so much, Matt. Great to see you. Happy holidays.